Welcome back to my channel. We're going to be jumping into two trades on the foreign exchange market, breaking down the reason behind my position and my thought process. Secondly, we've also got my £1 raffle where you can gain access to my online trading course for simply £1, and also the winner will grab it for free. So enjoy and stay tuned. Let's jump straight into the charts and start breaking down US dollar against the Japanese yen. So for those that know, US dollar against the Japanese yen has been on an absolute blast of a rally. We have seen the Japanese yen completely weaken against the dollar, and we have seen this happen progressively now, causing US dollar against the Japanese yen to strengthen. Partly due to this is the interest rates. We've obviously got very low interest rates on the Japanese yen.
Bank of Japan has ended negative interest rates 17 years since the last hike.
They're scrapping the yield curve control, and they're also going to essentially pare back their purchase of ETF.
YCC gone, the end of negative rates as well.
Versus the US dollar, which is positive rates, which gives us our overnight holding fee a positive kick, which means it's nice to hold the long-term long position because we gain for every single night that we hold that position. Ultimately, we was waiting for the Bank of Japan to intervene. We actually saw the Bank of Japan intervene and confirm that they did here on this spike that I'm highlighting. It didn't last long. Literally 1 hour, completely reversed. Traders and institutions bought into that dip, and ultimately it then rallied. It hasn't been confirmed, but there is a lot of rumors spreading around the financial sector that when it hit 160 up here, the BOJ did intervene and aggressively intervened, pushing the price all the way back down to 154. This was over a 3% currency drop on the pair. Ultimately, price came down, rejected. I bought into this. I'm targeting a 3-to-1 on the 1 hour time frame. We can see that we had a nice little bit of price action there, rejecting those previous highs. You can see that around here, bouncing off, rejecting it. We had our buyer's bar confirmation, went in for a nice 3-to-1. Now there is the chance that the BOJ could intervene again, and this trade could end up being a loser. Overall, I'm very happy with the trade. Is going with the long-term fundamental direction, which is what I focus on first over technicals. We've also got the economy on our side with a stronger US economy over Japan. We've also got the fundamental side of the interest rates as well that we've taken into account on this position. As you can see, I'm earning positive swaps, which is what I like to see. It reduces my risk every single night that the position goes on. At this moment in time, we're a little bit under a 1-to-1. There's going to be no moving to break even. This trade was taken using my fancy new risk tool, which I really like, which allows me to plot my entry, stop loss, and automatically, you can see on the chart there, calculates my lot size for me and allows me to tell me where my 2-to-1 is, and then I can literally click buy. I'm already in, so I'm not going to do that. And it places the trade for me. So quick lot size calculation and runs my trade. So that is US dollar yen in a nutshell. Now let's have a look at euro US dollar, which is not going the best in my favor at this moment in time, but I'll run down with you nonetheless. Euro weaker against US dollar. Fundamentally, economy, euro is weaker against the US economy. Also have the interest rates as well in our favor from a short perspective. I saw price come down, reject this previous support level from a technical level around here, and ultimately decided to go short. Was up a 1-to-1. I took this in my 3-day live event, up 1-to-1. It's been stagnating since. We're now just coming back to test the entry again, so it'll be interesting to see how this pans out. Targeting a 2-to-1 reward to risk, short on this. I know that the moving averages have crossed over, and that is a little bit of a no-no for some people. However, the behavioral trait of this on the 1 hour has done this previously, and from my fundamental outlook, I'm still maintaining a short position. So I'm going to hold this no matter what, stop loss or take profit. I'll keep you updated and let you know how it pans out. But you can see the P&L, you can see the positive swaps that I'm getting for both trades in my direction, and overall I'm happy with how the trades look. So guys, if you want to get involved in my £1 raffle, the link is in the description. This will give you access to my entire strategies that I use within the Forex markets and have done since 2012. We've been around for a long time now, so it's a no BS course. It'll give you straight facts of exactly what we look for to tackle the markets. And rather than having to buy it on our website, you can enter into a £1 raffle where individuals will be put into a raffle and selected at random to win a prize. So the link is in the description if you want to enter the raffle. Best of luck. We're also seeing gold now taper off and come down from those highs. We're seeing the trend reverse on the 1 hour. Again, very interesting times with gold. It'll be interesting to see how much downside we see. For those that don't know, I spoke in depth with a Bullion Vault, the director of research at Bullion Vault, who look after 3.3 billions worth of gold, getting their outlook on the Wise Wealth podcast. If you haven't checked it out, check it out here. It was a really awesome discussion. And again, we're just talking about the markets at highs, how that looks, and how people should be moving over to gold with the stock market so high. But it's interesting to see that we're now seeing some selling off coming into gold, and ultimately it's not something that I'm going to be buying or selling from a mid-term or long-term, because fundamentally speaking, we're in an interesting place. I discussed this on my last video. So gold is actually just going to be sitting on the sidelines for me. It's not something that I want to be approaching or trading. Fundamentally, it's unclear on the direction, and with interest rates this high and also the stock market's high, we should see gold have increased volatility whilst traders digest on which direction they want to go. So sitting on the sidelines with gold, I would be looking at short, but because of the fundamental information around gold, it was very much a difficult play on understanding whether or not I should go to the short side. So I kept on the sidelines. I'm going to keep watching it and see how far gold slips. This could just be general profit taking from traders, but remembering here that this is very much the Chinese government that has been buying up gold, Chinese retail investors, and heavily not focused on the West. The West, if anything, have been increasing their holdings ever so slightly, but nothing too insane. So a lot of this is within the Asia market, not within the West. Overall, my focus is going to be against the yen and the weakness of the yen. It'll be interesting to see how they continue and pan out. So focused on euro yen, pound yen, US dollar yen. Obviously keeping a tabs on the Bank of Japan intervention and overall trading on the 5 and 15 minute time frame to the upside. So hopefully dodging the Bank of Japan, but we may not get away with every single trade dodging them and may get caught on a few. But this is where reward to risk come into play, and overall making sure we have the 2-to-1s and 3-to-1s and a nice diversified portfolio.